I'm Kristen King, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. Though it only comes around once every 4 years, the presidential election has a habit of catching investors off guard. Now, because of the way the U.S. electoral system works, we have the benefit of a lengthy transitional period between the election day and the inauguration of the winner. Before you know it, it's come and gone. So if you haven't already adjusted your portfolio, you can now do so, even after polling day. The inauguration is set to take place on January 20th, 2021, some 10 weeks from polling day. And though the president-elect can influence policy in that transitional period, if there is a change of administration, those weeks are usually used to make key appointments and to participate in a handover of responsibilities. So, if Joe Biden emerges victorious, then investors and traders will have a longer window of opportunity to make changes to their portfolios and positions. But if Donald Trump is elected for a second term, then to all intents and purposes, there is no transition period. But we may see some personnel changes among the White House staffers and agency leadership. A contested election, which looks increasingly likely, will only have a trivial impact on the economy. But Bank of America believes that a multi-week contested election could drag down GDP growth by up to 1%. They also foresaw a legal dispute emerging, noting that a high volume of mail-in ballots could cause delays. Their advice to investors is be patient and ready for surprises. Because the election is taking place under the shadow of COVID-19, both candidates have pledged to use a fiscal stimulus to support and boost the economy. However, the Democrats are seen as being the biggest spenders. In the event of a Biden victory and Democratic Congress, with an expectation of at least another $2 to $2.5 trillion being pumped into the economy as soon as possible after the inauguration. If Joe Biden were to win the election but lose outright control of Congress, then that could sharply reduce the size of any stimulus to as low as $500 billion and also delay its deployment. A Trump victory and a divided Congress, effectively the current status quo, would likely see a stimulus package of up to $1.5 trillion, according to Bank of America economists. The trillion-dollar differences between the potential stimulus plans highlight why a Biden blue wall victory is synonymous with the so-called reflation trade. There is nervousness in the market, however, with Trackstar IQ, our proprietary search tracking tool, showing that in recent weeks, close to 100 institutional Wall Street investors have been researching volatility-related ETFs. Joe Biden is also thought likely to take a tougher line with perceived big tech monopolies and antitrust infringements. A rotation out of growth stocks, including big tech, and into the value stocks and smaller companies could well follow a blue wall victory as a result. And there have been some signs that money managers have already started to position themselves for that eventuality. Of course, the volatility and sharp whipsawing we have experienced in equity markets over the last week, combined with another rapid rise in the number of coronavirus cases, has made it very difficult to time and execute those kinds of portfolio adjustments. 2020 has been a year full of uncertainty, and as with the larger sell-off in March and April, the best things for investors to do now is probably to exercise a degree of patience and to wait for concrete evidence of the election results. That's all we have time for today, folks. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. As always, make sure you do your own due diligence before making any investment decisions.